All right, so we're going to work through a sample problem, problem 17.1b. Your assignment is problem 17.1a, and again, these are very similar problems. You should be able to take this problem and hopefully use it as a pattern to do 17.1a. I'm hoping that that is working out well for you. So anyway, let's read the problem and work through it. Winona Enterprises uses job order costing. Manufacturing overhead is charged to individual jobs through the use of a predetermined overhead rate based on direct labor cost. So the rational basis for assigning overhead that they've determined is direct labor cost, probably because these jobs are fairly labor intense. If it wasn't labor intense, if it was machine intense, they would use probably machine hours. But here we're using direct labor cost. The following information appears in the company's work in process inventory account for the month of April. And so you have debits to the account, you have your balance to work in process as of the beginning of the month, 16,000, direct materials 25, direct labor 30, and manufacturing overhead, which is applied to jobs as 250% of direct labor cost, is 75,000. So total debits to the work in process account is $146,000. Now notice again how managerial accounting ties back into financial accounting. We're talking about debits. You know, somebody still has to account for this stuff because it's going to show up eventually in the one of the four financial statements. Credits to the work in process account are transferred to finished goods inventory account, 66,000. And of course, the difference between 146,000 and 66,000 is leaves a balance in work in process account of 80,000. Okay. So instructions: A, assuming that the direct labor charge to the jobs still in process at April 30th amounts to $18,000, compute the amount of manufacturing overhead and the amount of direct materials that have been charged to these jobs as of April 30th. Okay? And so to work this problem, first we're going to figure out the factory overhead charged to either work in process or jobs in process. Either one will work. And so as of April 30th. Okay? And so zoom in a little bit more. I'll try to write bigger as well. Okay? So, first thing we're going to do is take our direct labor charged to work in process as of 4/30, and that's a given. That's $18,000. And you're simply going to take the overhead application rate, which is a given, which is 250%. And so you simply multiply the 250% times 18,000, and what you come up with is the manufacturing overhead that is applied to jobs as of 4/30, and that equals 250% of 18,000, or $45,000. Okay, so fairly simple. Just have to be familiar with the process. Now, to find the direct materials charged to the jobs in process, so that's going to be our next thing. Direct materials charged to either work in process or jobs in process as of 4/30. You're going to take the total work in process as of 4/30, which we know from the problem is $80,000. It's the ending work in process as of 4/30. Okay? What you're going to do is you're going to subtract the the amount of direct materials included in that total work in process as of April 30th. So we'll call that direct materials included. That's 18,000. And we know that the total manufacturing overhead included from our calculation above is 45,000. So essentially what you're doing is subtracting these two numbers from this number. So this total is 63,000. And so the direct materials charged to work in process as of 4/30 is the difference of 80,000 minus 63,000, these two numbers. So that's going to be 17,000. Okay? So that's A. This is 17.1.1BA. So I'll zoom in so you can see the numbers in case you can't see them all that well. Okay. Now, moving on to 17.1 large B, small b. Let's read what that says. So this says to prepare the general journal entries to summarize the manufacturing costs, direct materials, direct labor, and overhead charged to production during April. Number 2, the transfer of production completed during April to the finished goods inventory account. And 3, the cash sale of 70% of the merchandise completed during April at a total sales price of $98,000 show the related cost of goods sold in a separate journal entry. So that's a lot, but if you break it down, we can deal with it. Okay, so let's do 17.1b, small b, 1. And so this is our general journal. We're doing, so I'll put up here, general journal. And the name of this company is Winona Enterprises. And below we'll create 2 columns, our debit and credit columns. I never was good at art, so I apologize for the scraggly line. Alright. Of course, this is debit. This is credit. Okay? So, first thing we're going to do in 1 is we're going to figure out how we record the cost charged to the jobs during April. So what we're going to add is the sum of direct materials, direct labor, and manufacturing overhead applied for the period. Now, understand the beginning work in process has already been dealt with in the general journal. It was done in the month of March. So we don't worry about that. We're only worried about the sum of materials inventory and direct labor and factory overhead that are brought into work in process during April. And so your work in process inventory is going to be your debit for $130,000. Where do we come up with that number? Well, that is your materials inventory. Remember, before we bring it into materials into work in process inventory, it's in materials inventory. So we're bringing it into this number, work in process inventory, but we have to take it out of materials inventory. Before this entry, materials inventory had a debit balance that included this $25,000. So once it becomes work in process inventory, you credit materials inventory for $25,000. Same for direct labor. You take and credit direct labor for $30,000, and then manufacturing overhead is simply 250% of this number, so $75,000. Okay. Number 2. Again, let's look at what 2 requires. Says prepare general journal entries to summarize the transfer of production completed during April to the finished goods inventory account. So again, if you read this problem, it says that there was a credit to the work in process inventory of $66,000 for the transfer of finished goods inventory to the transfer to the finished goods inventory account. So we simply take and we're going to credit work in process inventory for that $66,000, but our debit is going to go to finished goods inventory, $66,000, and work in process inventory is our credit. We're taking it out of work in process. Now notice, if you recall in financial accounting, you're supposed to add the little notes after each journal entry. For the sake of speed, I've not done that. If you do, that's great. If you don't, I will not count off for it. So, but technically, you're in your journal entries, you're supposed to note what the transaction's about. So, if somebody came along who was not familiar with these transactions, they would know why the journal entry was made. All right, number 3, last but not least. Again, let's look at this. It says prepare general journal entries to summarize the cash sale of 70% of the merchandise completed during April. So what would that be? At a total sales price of $98,000, show the related cost of goods sold in a separate journal entry. Okay? So the first thing, you should have learned some of this in financial accounting. First thing you're going to record is your cash sale. So you're going to debit cash for the $98,000. You're going to credit sales or sales revenue, either one, 98,000. And the cost of goods sold in this example says that it's 70% of the total work in process that's transferred to finished goods inventory. Or put another way, like they say, the cost of work in process or merchandise completed during April. So that's the same as saying the amount that was moved from or transferred from work in process to finished goods inventory during April. And so what is that? Well, they give you that it's 70% of the 66,000 that was transferred during the year, or during the month, excuse me. So I'm moving the paper down so you can see this. And so 70% of 66,000 is 46,200. So that's going to be our journal entry. We're going to debit cost of goods sold. Kind of went too far there. Let's start that over. I'm just going to initial cost of goods sold, 46,200. Finished goods inventory is the account that this gets backed out of once the sale is made for 46,200. So those are your journal entries that you would make for each of these transactions. Okay? So, anyway, it's a fairly simple problem. I mean, I could have given a much harder problem, but I just wanted you to get a feel for what it would be like to account for the processing of manufactured goods as well as sold goods in a manufacturing type of operation. So anyway, the problem is 17.1a.